Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 17th of June, 2021. And we're looking at a significant fall, if not crash, in the price of gold and silver as the result of the Fed's hawkish position yesterday on interest rates. So let's take a look. Now, earlier today, we produced a video entitled Morning Gold and Silver Update, Thursday, 17th of June. FOMC comments knock gold and silver prices. And yesterday, we did a similar video in anticipation of the FOMC announcement and also one on Bitcoin versus gold and silver and what was happening in both spaces. Now, we've placed links to all three of these in the description box below. Now, at the time of producing this video, which is approximately 11:15 a.m. GMT plus 1, we've now had some benefit of seeing how markets reacted to the FOMC's announcement yesterday, though of course we're still waiting for the American equity market to open, and to view the reaction to Fed Chair Jerome Powell's comments on interest rates, quantitative easing or bond buying, and inflation. Now, in a nutshell, 11 out of 18 Fed officials projected at least 2 quarter-point interest rate increases for 2023. And some even suggesting that they might come into play at the latter end of 2022. But in their statement, officials still pledged to keep policy supportive for now to encourage an ongoing labour market recovery. The statement also confirmed that the Federal Reserve would continue their asset purchases of $120 billion per month. So, in terms of their forward guidance, they're basically suggesting that we shall have interest rate rises sooner than originally anticipated. There were a number of caveats around that, including, of course, no worsening effect of the coronavirus pandemic, but at the same time admitted that they weren't going to reduce or change the monetary support that they're currently giving. And that's really very important to bear in mind. So they've put out the fear, but at the moment their physical responses are unchanged. That nevertheless, this caused a rise in Treasury yields and the US dollar value, placing enormous pressure on gold and silver prices. Now, one commentator, Gary Wagner, stated, quote, "The Fed's dot plot chart showed 11 of 18 officials expect at least 2 rate hikes in 2023. In March, only 7 expected 1 hike. 7 officials now see the first hike next year, up from 4 in March. This was enough to set the tone of this month's FOMC meeting as more hawkish than the last meeting. The outcome sent stocks lower and caused gold to tumble in a free fall." Unquote. Well, let's look at the extent of that free fall. At the time now of producing this podcast, gold is standing at $1,806, some $71 lower than last Friday's close, and is only $3 off its week's low of 1803, so it actually dipped to 1803. Silver is standing at $26.81. Now that's $1.12 off last Friday's close, and 7 cents above its week's low of $26.74. Of course, the dollar has strengthened, and the spot index is now comfortably above the 90 level, which is where it's hovered really, give or take half a point, or 0.5, where it's hovered for some weeks, and is currently standing at 91.66. So it rose yesterday, and also it's up some 0.53 points so far today. Now, we pointed out in our daily morning update that the technicals were showing weakness in both gold and silver and were forecasting price falls. That was yesterday's update. And we highlighted that in our morning video. Now, so far, they're still doing the same today, though there will shortly come a moment when that position reverses. Fed officials raised their GDP expectations for this year to 7% on the back of economic news received from 6.5% previously. The unemployment rate is estimated to remain unchanged at 4.5%. The Fed raised its inflation expectation to 3.4%, a full percentage point higher than the March projection. Now, those who follow us will know that we announced, I think it was on the weekend, that the latest inflation rate annualized came out at 5%, regarded as transitory, but nevertheless much higher perhaps than even Fed officials were anticipating. Now they're saying that the official rate, it will come down a bit from that, but it's likely to be at 3.4%. Now the Fed has stated all along it will tolerate a rate above 2, but not for any considerable period of time, and certainly not if it's almost double. Now the concern is not necessarily 18 months away when rates may start to rise, and only then incrementally and slowly. The concern is, when will the Fed taper back its bond buying program? Because that will happen first. Currently, it is buying $120 billion worth of assets a month, of which essentially $80 billion is treasuries or government bonds and $40 billion mortgaged-backed securities. Now, much depends on continued economic data, of course, and hopefully no resurgence of the coronavirus causing businesses to close again. And this is a concern we're experiencing at the moment in the United Kingdom, as our full opening program has been delayed a month. Inflation, which touched an annual rate of 5% this past week, has caused some concern. Even the Fed and others have called it transitory. However, we are also seeing upticks in global inflation, with the UK expressing concern this very week. As far as economic data is concerned, last week was quite positive, although retail sales were very disappointing on Tuesday for May, but industrial production rose from 0.1% to 0.8% in May. Now later today, probably not long after this video will be published, we have the normal weekly jobless claims reports and also the index of economic indicators for May. And there is no data scheduled for release tomorrow. So gold and silver prices are now likely to be determined, of course, by continuing investor reaction to the Fed statement yesterday, and will be directly impacted in any further rise or fall in the value of the US dollar. Now, in our weekly update published last Saturday, we stated the following for this week. Quote, so our gold trading range for this coming week remains unchanged, with regular trading for gold at 1850 to 1950, with 1800 and 1995 as outliers, and silver trading between $27 and $28.50, with $26.50 and $29.50 as outliers, though we are expecting the outlier territory to be reached this coming week. Well, so far, this is what's happened. And outlier territory has been reached, or close to it, to the downside. We really do wish more of our subscribers would listen to our weekly video, as our accuracy has been so high for a number of years, to the point that we're now going to start to consider just sending it to Inner Sanctum members. Because we've noted that other YouTubers are taking our predictions and producing videos off the back of them, gaining considerably more traction than us as they use more clickbait and fancy images. And frankly, we do feel a little abused and somewhat neglected, not by you who are listening, but by others who aren't. We produce perhaps the most accurate forecasts in the whole of YouTube space, as far as gold and silver prices are concerned. And if not the most accurate, we're certainly in the top 3. And yet our following in number terms is derisory, though excellent in quality terms. And frankly, we're not here to help others who scam their way to high subscriber rates on the back of our hard work, because each video, when we do these assessments, we don't just look at the newspaper and just repeat, although in terms of delivery, that seems to what happen, but in terms of practice, we're doing a lot of fundamental and technical analysis in the background. The fact we don't show you the fancy charts doesn't mean the work's not done. But we shall watch to see what happens over the next week or so before making a final decision on the weekly update. We'll still produce videos every day for subscribers and viewers, but we think that our Saturday update predicting what's going to happen to prices the following week is of such value now and such high accuracy that perhaps only those who've been paying should actually benefit from it. Otherwise, they can quite rightly ask what's the benefit of making a payment. Now, we're still expecting our low outlier just about to hold, or at least within a couple of percent, as these changes the Fed alludes to will not come into effect for 18 months or longer in terms of interest rates, and more than likely not for 3 or 4 months minimum in terms of tapering. They're using words currently to control markets, as they know that to go too hawkish at this stage in terms of monetary implementation could seriously jeopardize any recovery. Equity markets so far have taken the news in their stride, with most US exchanges falling by less than 1%, and a similar situation occurring in the UK and European markets too. Although we have to see what's going to happen when the US market opens in a few hours' time. Interestingly, even the crypto space has taken a hit, with global market capitalization down nearly 8% over the past 24 hours, though admittedly again, they're still reversing from some considerable highs these past few months. So in conclusion, we can expect a little further weakness in gold and silver prices, but not a rout, as both have already been hit hard, and we should be looking closely at other major economy announcements over the coming days to see where the US lies in terms of comparison. Please share your thoughts. What do you think is going to happen to gold and silver? Do you see a further downtrend? And if so, to what extent? Or are they going to bounce right back up from current levels? Thank you so much for listening. If you haven't done so, please subscribe to our channel, press the bell sign so you're notified of our videos, kindly give us a thumbs up, and most certainly comment below. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.